Welcome back to another episode here on Financial Friends. Welcome back to the Dividend Journey, and welcome to Coke versus Pepsi. So before we get into all of that, I want to say thank you for viewing. If you were excited for this video and you would like to see more stock comparison style videos, go ahead and leave a like down below, and then also leave a comment what two stocks you would like to be matched up against each other next. So I also want to give a little shout out to the Patreon. I do have a Patreon. Help support me, help support the channel. I'm looking to continue to create content into the future, and supporting the Patreon helps me do that. But it also gives you early access to This Week in Finance, access to the Discord, and some other exclusive content, and a direct line of communication to me that we don't necessarily have here, really even on YouTube and other social medias. So go ahead, check that out. I appreciate the support. You do not have to join. Obviously, all of my content will be still posted on YouTube, Instagram, Twitter, TikTok, everywhere that you could see down here. So let's get a little bit of an update on this portfolio before we dive into Coke versus Pepsi. So first things first, we did add $25 worth of SCHD. That bumps the dividend yield from 2.2 up to this 2.25 number, and the annual income from $7.45 to the $8.16 that you do see here. We also talked a ton about getting the portfolio to 50% ETFs. We have done that. So now we will take a look at adding, to our other positions, seeing whether we can get a new stock into the portfolio, but making sure we're consistently keeping 50% of the portfolio ETFs. And a video coming on that very soon as to kind of why that is, why I think of the ETFs in the portfolio kind of as the ship and the anchors kind of as like the weights on the side, keeping the ship, steady and stable. But we will get into that a little bit later in another video. Let's dive into the reason why you clicked on this. Coca-Cola versus Pepsi. So a quick overview and shout out using the dividend tracker. Go ahead, check the link down below if you are interested in using this software. There's a paid version of it. I am currently using it. There's also a free version as well. So go ahead, check that out. If you're interested in joining, you can go ahead and join using the link. They will also support me as well, so I do appreciate that. Now, you could see here that Pepsi does grade out at a 63% versus the 63 dividend grade and a 57 dividend grade for Coca-Cola. Now, you could see their market caps pretty similar in the grand scheme of things. Dividend ratios, again, relatively similar. The price on Coca-Cola is a bit smaller, and that dividend yield is a bit larger. They also pay out a little bit more than Pepsi does. There is a video that you can go ahead and check out right up there on payout ratio and really why the payout ratio should fall within a specific range. So go ahead, check that video out. But not too much cause for concern with either of these two companies. They make a ton of money. Their businesses are relatively stable. And therefore, the 73 and that 80 number, 82, I'm not super worried about. Dividend streak, you can see for both, is 10 plus years. Now, Pepsi's is 50 years. That's the actual number there. And Coca-Cola's is 60 years. That's the actual number there. Moving into these sort of ratios and such, you could see a 30 price to earnings ratio on Coca-Cola. A little bit cheaper of a valuation here with Pepsi, 29. Now, not too much difference. You can also take a look at this current ratio. 1.52 is a good number for current ratio. Current ratio is going to be that short-term assets, short-term liabilities, or short-term debt and current assets kind of put over each other. You're looking for a number over 1. That means more assets than liabilities or short-term obligations in this case. And 1.52 is actually a relatively strong number. Falling below that number at 0.95, not necessarily a fan of that. However, you will kind of begin to see why that number is the way it is as we break down a little bit of the broader picture between these two companies. And we will touch on margins in a second. So, what is the difference between these two? What's the big kicker? This is something that I put a little bit more stock in, pun intended, than I do all of these numbers. These numbers can become overwhelming. They can be changed and manipulated. And so, yes, they're very important when deciding to invest in good quality companies for the long term, but they aren't the only thing you should consider. You should really consider the business. Do you understand the business? How can a company make and lose money? Coca-Cola is in the beverage business, and that is it. Again, Simply, Body Armor, Smart Water, tea, Honest Tea, milk, that they produce beverages. Pepsi is concentrated heavily in, drinks. Aquafina, Naked, Tropicana, Propel, Lipton, can go on and on and on. However, they have Frito-Lay, they have Quaker, they have Rice-A-Roni, they have Pearl Milling Company, and they have these other businesses or these other brands or assets underneath the PepsiCo umbrella that diversify them. Now, they do bottle and distribute drinks like, I think, Lipton. I know they do that with Starbucks, but they obviously also have big powerhouses like Mountain Dew, Gatorade, Pepsi, etc. And Coca-Cola, they have their big powerhouses too. Smart Water, the acquisition of Body Armor relatively recently, actually, Minute Maid, and of course Sprite. And then the competitor to Gatorade is Powerade. And vitamin water is a very big one too. Don't get me, don't get me confused. Vitamin water is big as well. So tons of big beverages over at Coca-Cola. The biggest sports drink rather in Gatorade over at Pepsi, as well as some massive, massive brands like Mountain Dew, and then Frito-Lay, again, just huge and expansive. Same thing with Quaker, produces, granola bars out the wazoo. So moving a little bit further into these two companies, we can check out their price over the last year. Both posted really, really good returns over this last year. 23% for Coca-Cola and 22% for Pepsi. So again, comparing them over the last little while, relatively the same. Now, I did want to touch on that margin and kind of why that's important. So you could see here $20.19 billion in revenue for Pepsi. We slide over here to Coke and you can see $10.4 billion. Now, those numbers, you could tell, okay, Coca-Cola is 10, Pepsi is 20, that's double, okay, cool, big whoop, what is the difference? Obviously, Pepsi makes way more products. Let's look at income. So the amount of money they made, $2.47 billion, $2.22 billion. It's pretty much the same number, right? And that's where margin comes in. 11.02% margin. So they're making 11% on every product. Coca-Cola is making 24%. Now, part of that has to do with the concentration of the business, with Coca-Cola just focused on beverages, and Pepsi is a lot more expansive. They are having boxes and individually wrapped granola bars and all these other different things that they're having to spend money on to generate that amount of money, or that income, so to speak, or revenue. However, Coca-Cola does something a little bit different. Let me find my spot here in this. So you could see that the overwhelming majority of Coke's trademark beverages are not packaged and distributed. Instead, Coca-Cola produces the concentrates and syrups for shipment to bottlers. So another separate kind of entity for processing, packaging, and distribution. And this is what allows them to contain that high 20 of operating margin. Again, we saw that number here, 24.6 billion. I'm sorry, billion, 24.61%. And that's what allows them to kind of have that higher number. They also don't have as many employees as Pepsi does. Pepsi has 291,000 employees versus the 80,000 for Coca-Cola. Again, they don't have as much sort of overhead or as much to think about, as much to spread out as Pepsi does. But you can look at that as a pro or a con. Pepsi having, again, all this diversification amongst food brands. Coca-Cola, not so much. You can also see, and they talk a little bit up here, that Coke took a bit of a decline when the pandemic initially started. Well, why? When the pandemic struck, consumers rushed to grocery stores to stock up on beverages and snack foods. Coca-Cola was a little bit more concentrated in sports, movie theaters, restaurant chains, Not so much with Pepsi. Obviously, they have Quaker. Touch on that a little bit down here. They have big brands like Quaker and Frito-Lay. Where does it say that? Right about here. And they also kind of come up with these other joint businesses, Unilever, Starbucks, Sabra, and they're able to kind of, package and put their name behind their brand and put those brands into stores. So again, something to consider between these two companies, a major, major difference. But Coca-Cola being more focused on the carbonated soft drink industry, they're going to have a larger market share. Again, being in sports stadiums and all that type of stuff, 44.9% of the market share is dominated by Coca-Cola, leaving just a measly, I say that like it's small, measly 25 or quarter of the space for Pepsi to dominate. So the differences between these companies, it really comes down to what they do. Coca-Cola produces beverages. Pepsi produces beverages and food. In terms of dividends, in terms of, the strength of the company, it's really apples to apples. The business is different. The core business is different. I feel a touch more safe in Pepsi than I would in Coke. Reason being, well, they're a little bit more diversified. They don't pay out as much at the moment, and I feel like that allows them a little bit more space to grow. I mean, you're always going to need food, and you're always going to need drinks, and they own some massive, massive food companies, and obviously they are a massive drink distributor and producer as well. Coca-Cola just kind of focus on the beverages. Who knows? Maybe they expand into food, maybe they don't, but the comparison between these two is relatively similar. And so instead of having to decide, I just buy SCHD. Makes my life a ton more easy. Obviously, I have some other companies here as well, but I prefer the ETFs. We will touch on that more in another episode. So make sure, if you want to see that episode, hit the subscribe button below, hit the little notification bell right beside that, so that way you can be notified. And if you like this video, go ahead and hit the like button. It does help out the YouTube algorithm. And with that being said, see you all next Thursday.